This is Robert Miner with Dynamic Traders Group with our Saturday, September 29th YouTube Market Strategies Update Report for the week beginning October 1st. And we're going to go through just two or three markets really quickly because I think there's some fantastic trades set up for this coming week. And importantly, I think volatility is going to increase fairly dramatically this next week. Let's take a look at why. We'll start with the stock indexes. This is the EX weekly data. And look at this past week, what a narrow range inside week it was, but with a fairly strong close below the close of the prior week. A narrow range inside week or bar for that matter, and whatever time frame data you're looking at, represents a period of indecision. The massive traders don't have a firm opinion on whether the market's bullish or bearish, but they're going to figure it out this weekend, and I expect we're going to see on Monday some pretty sharp moves. The weekly momentum, the short-term momentum, 8 look back, made a bull reversal just by a fraction this past week on this inside bar, even though it did close lower. And why is this suspect, this bullish reversal on the weekly momentum? Mere fact that it's an inside bar. Typically, on any sort of technical study, whether it's an indicator or a pattern study, reversal type pattern study, is an inside bar isn't counted because it's not part of a trend. It's a period of indecision. So we just ignore that. And before this past week's bar was made, the weekly momentums, both the 8 and the 13, were bearish. So I suspect, even though we made a bull reversal in the 8 look back weekly momentum, the 13 is still bearish. In fact, it made a bearish reversal from the overbought zone, and that's significant. And I think that's the one that's going to represent what's going to occur next week. So how do we decide? I'm not making a forecast. We're traders, so we make trade strategies. Not making a forecast. That's just what I suspect will happen. This is the daily data. And what's important is that in the September 21st, that was last week ago, Friday to Monday to the 24th, were two key time factors. There's actually about 6 time factors that day, but these are 2 of the key ones, the high to high to high and the low to high, low to high. That's called the alternate time projection. Fell on the 21st to 24th, and of course the 21st, it was the high to date at least. And then we had this wide range down day, outside down day, usually considered a trend continuation day on the day of the FOMC announcement last Wednesday. And then we've basically had a double inside days following that. That's one inside day after another. Again, period of indecision, no follow through following that meeting. And on Friday, we did have a daily momentum bull reversal on the short look back 8. The 13 is bearish, however. So again, this is an inside day signal. And man, you really need to ignore that and then see if there's any follow through in the days ahead. I'm going to show you what to look for on Monday. That's this Monday, October 1st. This is the 240-minute data off of the September 21st high. And potential 1 or A, 2 or B, a 1 of 3 or a C. And then, of course, we've been inside and inside the day from that wide range on Wednesday, which was the Fed announcement. So here's what you need to do, and this is what is going to tell us where the trend is going to be. Not a short-term trend, I think a trend that's going to last not just several days, but maybe a few weeks. The breakaway this early next week. I suspect we're going to see it happen Monday. So again, that's speculation, but here's a specific strategy. I've just drawn a line above the high from last Wednesday and one from the low last Wednesday. That's that announcement day. And whichever direction we close out of that range, that's going to be the weekly trend. So look for Monday. If we close above 29.36, Monday or Tuesday, anytime whenever we close out of this range, close above 29.36. That'll confirm we've probably made that weekly low, and we're going to be several weeks sideways to up, which should go to a new high above the September 21st high. However, if we close below Wednesday's low at 29.0750, close below that, that's on a daily data, more than likely we're going to have a bear trend continuation, and I suspect it'll be some serious liquidation. It'll be some serious selling that will occur. So we should have a really good trade on the short side if we close below 29.0750, and a really good trade on the long side at 29.36. And if we just looked at weekly momentums and daily momentums, we'd have to suspect that it's going to close on the upside. But again, because those technical reversals were made on an inside week and an inside day, basically I don't trust them. And if I had to wager, which I don't, because we're not forecasters, we're traders, but I would suspect we're going to close on the downside, and we're going to avoid those inside bar momentum reversals. So we're going to see what happens, but that's your trade strategy. Really simple at this point in time. Really simple, and there's probably going to be some significant follow through on either side. So lots of opportunities to enter after we've closed either above Wednesday's high or below Wednesday's low. That's what you want to look for early next week. Notes and bonds are in the same essential position, that more than likely September 25th was a weekly low. That's a low that weekly low is a low that lasts for 3 to 5 weeks. And because the more than likely the higher time frame trend is bearish, is that any 3 to 5 week rally should be a correction within the bear trend. But boy, we came down, and I'm not showing the details on here either on the weekly chart or even this daily chart, but this low that was made last Tuesday was made right at the end of wave 5 price targets, and potentially has completed a 1, 2, 3, 4, 5 coming down in Elliott wave terms. That's an impulse trend, which should be a higher time frame wave 1 coming off of the August high, which completed a much higher time frame monthly wave 4. So we've already closed above the highs of the wave 4. That's the initial pattern reversal signal that the low is complete, and our 13 look back momentum, which should reach over, at least overbought before we have a daily high. If the higher time frame trend is bullish as anticipated, is not yet overbought, that would indicate we got a few more days anyway. The immediate trend would be sideways up for a few days. Eventually, if this is a weekly low as anticipated, notes should reach at least 119.15. That's the 50% retracement. That's usually the minimal that market reaches following a 5-wave decline, and we should be sideways to up for at least a couple weeks. The weekly momentum cycles would indicate it would be beyond mid-October, but we'll look at the 62% time retracement as the probable target if bonds and notes continue sideways to up. So they've already made their pattern reversal signal. So the assumption is the trend is up, but of course what could invalidate that? Well, simply a trade below Wednesday's low. That was the Fed announcement day. Trade below that low means we probably have not completed the weekly low as anticipated, and we're going to make a new low in bonds and notes. But all the technical positions suggest that we've made that weekly low. We're going to be sideways up for at least another couple of weeks, if not longer. So we're just coming off of that low, so great trade opportunity on the long side with very minimal capital exposure, whether you're doing futures or you're doing options or even an ETF like TLT. Great position immediately to enter a trade for what may be kind of a volatile move the first to next week. But again, remember, the stop out point is just a trade below Wednesday's low. That's a stop out for any long positions. And lastly, for today's update is gold. Again, I'm going to look at just the immediate position of gold. And of course, silver, as you know, has been much stronger than gold in the last week or two. And that silver's already broken up above its swing highs in the last few days. But here's gold. Is gold in a position for a trade? Well, I think it's in the ideal position for a long trade right now, Why is that? Number one is this whole pattern coming off of that high about 3 weeks ago, or 4 weeks ago in August. This has all the characteristics of a correction, and it sure has gone a lot longer in time than what we had anticipated a correction to this about 10-day advance. But boy, this is all corrective patterns. And on Friday, we made what's called a snapback reversal day, and that's a pretty sharp reversal on Friday. What's a snapback reversal day? It's where the prior day made, in this case, a new low, where the open was in the top third of the range and the close was in the bottom third of the range. And then the following day, we have the open near the bottom third and the close near the top third. So it's a snapback reversal. And it did that, making a daily momentum bull reversal from where usually daily lows are complete, and at the least it'd be sideways to up for a few days, and it did it right in the 4 to 6 trading day low to low cycle that's been occurring for about the past 6 weeks or so. It was on day 5 was Friday. I had this 6-day count from the last daily low, and the reason I had that on here is that, as I had told subscribers, we should complete a daily low no later than Monday, October 1st. And this Friday's snapback reversal day has probably completed. So gold is in an ideal position for at least a daily low, and that would be a low lasting 3 to 5 days, a great setup for a relatively short-term trader. And this low may morph in to a much higher time frame low and potentially complete this correction from the last month. And boy, there's just a lot of energy that's being wound up. Think of it in that way. Trading ranges and markets that don't trend for a month. You know, gold traders are getting anxious to pull the trigger. So we're either going to, I think, have a beginnings of a pretty sharp move up beginning early next week. And if that fails, and by chance it takes out Friday's low with a lower daily close, it would just be substantial liquidation to new lows. So again, being a trader, not a forecaster, is this is an ideal technical position to consider a long trade that might morph into lots more than just a 3 to 5 day net bull trend. So keep an eye on this on Monday. So we really got like all three of these markets we talked about. Probably on Monday, stock indexes, the ES is going to give us a clear signal if the higher time frame trend is bullish or bearish. The signal will be the closing breakout direction from Wednesday's wide range announcement day. Bonds and notes have already been in a technical position to have completed that weekly low. So as long as there's no trade below Wednesday's low, look at that for a long position that could last 2, maybe even up to 5 weeks. And for gold, at a minimum, we've made a daily low that may morph into a weekly low. So it's immediately in a position to consider long trade. Well, that's our update for today for our YouTube visitors. Thanks for checking it out. Subscribe to this YouTube channel so you get notified. Almost every Saturday I put up some little trade tutorial or market analysis or trade strategies. And of course, we'd like you to check out our DT reports and dynamic trader software at dynamictraders.com. Take care. Have a fantastic week.